Good evening, everyone. Warm welcome. I welcome you all in a very important and the new session. We call it as Finance Current Affairs. I know you are preparing for different exams that could be SEBI or maybe NABARD examination, but the news which we are going to cover today is really very important and it is relevant for all the exams which you are going to appear in the near future, be it regulatory body exams or maybe the other bank exams, because in today's session, we are going to discuss about a particular assessment report which has been presented by the international organizations IMF and World Bank collectively for India. I will be talking about the India perspective rather than talking about the different nation perspectives in the today's session. So before we start with the discussion, may I have a reply in the comment section that yes, I am audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. Can you please let me know in the comment section that everything is fine, we are good to go, so that I can begin the discussion without any further delay. Quickly, everyone. Okay then, let's get started, guys. Let's start with the discussion. So today we are going to discuss about a report, or I would say the findings which have been given. We call it as what? So we call it as Financial Sector Assessment Program. We will talk about its background, that what is basically Financial Sector Assessment Program. Then we'll talk about its importance. Then we'll talk about its reference with respect to India and what all points have been discussed in the current report with respect to India. क्या क्या notifications दी गई हैं, क्या क्या recommendations दी गई हैं, उन सारी चीज़ों के बारे में आज के सेशन में डिस्कस करेंगे. ठीक है जी. तो उससे पहले पिछले सेशन से रिलेटेड जो हमारे पास कुछ क्वेश्चंस हैं, पहले उन्हें सॉल्व करेंगे. फर्स्ट विल सॉल्व द क्वेश्चंस related to the previous session and then we will be moving ahead. ठीक है जी. रेडी हो? एक बार प्लीज मुझे कमेंट सेक्शन में बता दीजिए if I'm audible, visible, everything is fine. Audio video clear है, so that we can begin the discussion without any further delay. Okay, I guess everything is fine. Okay, thank you so much for the reply. Let's get started with the discussion. तो सबसे पहले पिछली क्लास से रिलेटेड जो क्वेश्चन है उसको डिस्कस करेंगे. So the question from the previous session is now on your screen. The question says, select the most accurate statement about the rural consumer confidence survey as well as urban consumer confidence survey. Try to answer this particular question. इसके बारे में हमने पहले भी discussion किया था. I guess these questions are clear to you. So the first point is both RCCS and UCCS are the annual surveys. Are they annual surveys? No, sir. They are not the annual surveys. Rather, they are conducted on bi-monthly basis, so that is wrong. Next is RCCS covers the rural and semi-urban households across 31 states and union territories, or UCCS focuses on 19 cities and it is bi-monthly. Both collect the data. That is correct. So B option is the correct answer for the given question. Rest all options are wrong. Rest all options are wrong. Okay, moving on to the next question. अगर आपने पिछली क्लास अटेंड की होगी, then I'm pretty sure you must be in a position to answer these questions. But if you haven't attended the previous sessions, तो कहीं ना कहीं आज के जो questions है वो आप आंसर नहीं कर पाएंगे. But don't worry, take it as a learning. आज आंसर कर पाए बहुत बढ़िया, नहीं कर पा रहे तो next class में it will help you to remember the data. So let's move on. Let's move on to the next question. The next question is now on your screen from the previous session. The next question talks about, with reference to the findings of SEBI Investors Survey 2025, consider the following statements. तो SEBI Investors Survey के according हमारे पास कुछ statements हैं. We have to find out which statement is correct. The first statement talks about 80% of Indian households, they prefer capital preservation over high returns. Is this point correct? Yes, sir. This is absolutely correct. कि इंडिया में जब हम इन्वेस्टमेंट की बात करते हैं, in case of investment in India, 80% of us we talk about कि भैया हमारा पैसा बच जाए, रिटर्न जो हो वो ठीक है, लेकिन हमारा पैसा इन्वेस्टमेंट मूल कम होना नहीं चाहिए. Gen Z's investors, they show a higher risk appetite compared to the older cohorts. No, sir. It is unexpectedly wrong, क्योंकि हम समझते यही है कि Gen Z's जो younger investors हैं, they must be having higher risk appetite. That is not correct. They have the risk appetite around the same. जो जहाँ पे I would say the Gen Zs, they're also in a thought process that are 80% of the Gen Zs, they think that yes, our capital should be preserved. Next is the major barrier to investment include complexity, lack of knowledge, and trust deficits. That is correct. There is a strong preference for financial education in the regional languages. That is correct. Around 22% of non-investors, they are aware of security products and they are intended that they will be investing in the coming years. That is also correct. So keeping that in mind, sir, A option 1, 3, 4 and 5. A option 1, 3, 4 and 5 are correct. I hope you remember we have talked about this particular news in the previous session जहाँ पे हमने SEBI की findings के बारे में बताया था that what findings have been taken up by SEBI with respect to the capital market, with respect to the investment scenarios of the country. तो उसी के context में ये question last class में I have given you as a homework. Now let's move on to the next question. अगला question again, it's very interesting, it's very important. I'm pretty sure you are going to enjoy that as well. अगला question भी SEBI से है. The question says, with reference to the SEBI's ease of doing business initiative for stockbrokers in 2025, consider the following statement. First statement is Samuhik Prativedan Manch is a digital reporting platform which enable the brokers so that they can submit the compliance report at multiple exchanges simultaneously. Is it true? Sir, it is absolutely correct. So SPM is basically a technology based common reporting system that if you are a stockbroker, you report through this system and the report will be distributed, will be shared with all the relevant exchanges. So ये easy होगा for a broker. कहीं ना कहीं पहले problem ये थी कि आप अलग अलग जाकर अपनी reports को submit कर रहे हैं. Now it's easy, you just submit it one place and it's done. Next point is the first phase of SPM became effective from the 1st of August 2025 with 40 compliance reports operationalized. That is absolutely correct. सामूहिक प्रतिवेदन मंच का जो first phase था, it was initiated on 1st of August 2025. That is correct. Phase 2 has begun from 15th of October 2025, including the rest of the 30 compliance reports. That is also true. Under the revised penalty framework, 235 existing penalty items, they were reviewed, out of which penalties are removed for violation. That is 40 penalties are removed for violation. That is correct. Penalties were removed for 40 violations. That is correct. 105 out of 235, 40 are removed. That means इनके ऊपर कोई penalty charge नहीं होगी. 105 they have been included in the category that these are the minor lapses and they will be termed as financial disincentives rather than using a term penalty. Moving on to the last one. The last talks about 90. So we have the 90 violations which still retained and उनके ऊपर you will be applying the penalty. तो यहाँ से penalty 40 के ऊपर remove कर दी, बाकी 105 के ऊपर penalty word remove करके financial disincentive introduce कर दिया, and 90 violations they still stand strong under the category of penalty. That is correct. The term financial disincentive is applicable only for minor fraud activities, not major fraud activities. So keeping that in mind, 1, 2, 3 and 4 are correct. That means C option is correct, but the fifth statement is wrong. I hope it is absolutely clear to everyone. I hope it is absolutely clear to everyone. If it is clear, just give me yes, sir. These were few of the questions from the previous session. Let's jump on to the current session. The current session will talk about the financial assessment program, which include IMF as well as World Bank, and these insights which we are going to discuss in some time, they are really very important for your upcoming examination. Not only RBI Grade B, but it will be applicable for NABARD. It will be relevant for SEBI. It will be relevant for all your bank exams as well. Here we go with the first point. First point is Financial Sector Assessment Program 2024. So before I start, if I give you the overview of the news, Financial Sector Assessment Program is basically you can say it is the analysis of financial system which is done by World Bank as well as IMF, and then they individually present their reports. In these reports or in these assessment programs, what is actually done? First one, as the name suggests, financial sector of the nation is assessed. That means the assessment of financial sector is done. In this assessment program, it will give us the pointers regarding what good has been done in the past related to the financial sector, what issues are still prevailing, what areas are need to be focused, and even it will come up with the recommendations regarding the rules and regulations or policies which are ought to be framed by the regulators so that economy can be managed or the financial sector can be managed in an appropriate manner. ठीक है जी, तो ये है पूरी कहानी। मतलब ये हुआ कि IMF वर्ल्ड बैंक आपकी इकोनॉमी को, आपके फाइनेंशियल सेक्टर को असेस करते हैं, दे अंडरस्टैंड what you have done good, and obviously they will boost you to expand the same process. Then they will also highlight the issues which are prevailing in your financial sector. They will also highlight the areas which you must or which you might have I would say ignored or you might have forgot in order to target with respect to the policies. And lastly it comes up with the recommendations कि भैया क्या क्या recommendations है जो you have to follow so that your economy can perform pretty well. Your economy can perform pretty well as per the upcoming years to go. So let's decode one by one. What is Financial Sector Assessment Program? So Financial Sector Assessment Program is a joint initiative of International Monetary Fund as well as World Bank, launched in 1999 after the Asian financial crisis in 1997-98. So basically what is Financial Sector Assessment Program? So first point is it is a joint assessment program, or it's a joint initiative between IMF and World Bank 1999 after Asian financial crisis. Its primary purpose is basically to assess the strength, that means what you have done good, your weaknesses, as well as resilience of a country's financial system, and identify potential vulnerabilities that could compromise financial stability. तो यहाँ पे identify करो कि भैया कौन से ऐसे areas हैं जो आपने शायद identify नहीं किया, आपने target नहीं किया, आपने उनको नजरअंदाज किया, you have ignored it, but it may compromise your financial stability. So that identification is also done under this assessment program. So this FSA provides, first one, it is a complete health checkup of the financial sector. वो कहते हैं ना कि आइए जरा अपनी body का full checkup कराइए, full health checkup, full body checkup, whatsoever it is. So it's a comprehensive top to bottom health checkup of the entire financial sector, which is very crucial, which is very important. Second is policy advice to improve regulations, supervision and crisis management. तो यहाँ पे advice दिया जाता that what all improvements you need to be done in your regulations, in your supervision, as well as how you can manage the crisis, if any, in the near future. Then we have insights into how financial systems can support inclusive and sustainable economic growth. So this is very important. That means insights into how financial system can support inclusive and sustainable economic growth that is need to be done. So it evaluates a country's financial system to check, first one, its stability, that how well the country is stable, how capable the country is to handle the shocks, to handle the financial issues. Then it checks the development, how inclusive and efficient the financial sector of the country is. And lastly, it talks about the regulation and supervision, that how well the authorities, they manages the financial risk in the particular economy. अब ये इतना important क्यों है, जिसके लिए मैं इतना ज़्यादा emphasize कर रहा हूँ, उसका reason है पहला, this FSAP for India updates the last assessment which was done in 2017. तो इससे पहले जो assessment हुई थी, which was done by World Bank and IMF, it was done in back 2017, and now the assessment has been done for the year 2024. तो 2024 के हिसाब से आपकी assessment हुई और उस data को recently present किया गया. So it was led by World Bank and IMF. As I said, the team met around 200 institutions, like they have met with RBI, they met with SEBI, IRDI, PFRDA, Ministry of Finance, banks, NBFCs, insurance firms, pension funds, industry associations to understand the evolution of financial sector and its challenges. So उन्होंने क्या किया? Sir, it's a survey. It's a survey kind of situation where they have met n number of institutes such as the regulators, the actual service providers, as well as the ministry, so that they can understand how India's financial sector has grown over the period of time and what are the challenges which are still prevailing. Now this FSAP is so important because it helps, first one, to strengthen the financial stability. वो कहते हैं ना, why your full body health checkup is important, so that you can identify if anything is wrong in your body. You can pre-identify it, and by pre-identifying it, you can get it cured rather than waiting for the problem to show its symptoms, rather than waiting for the problem to show, I would say, its colors, to show its impact, to show its effect, and then you talk about cure, which may or may not be possible. So it's better to go with pre-handed or pre-assessment of your health, so that you can get the right cure at right time. Same is the case for financial sector assessment program, where if this program or this assessment is done, it will undoubtedly strengthen the financial stability. Kyun? Because it has identified the systematic risk, you can mitigate it, and it will help you to achieve, or it will help you to maintain the financial stability. Second is improve policy coordination among the regulators like RBI, SEBI, IRDAI, PFRDA, क्योंकि this assessment includes discussion with all of them. Each or regulatory body issues are clear, their vision is clear, their agendas are clear, so that the assessment will help them to come up with something which is common for all the regulators. Then we have, it will enhance transparency and investors' confidence. Obviously, if FSAP is showing good results, then obviously the foreign investors, they will have great confidence in the India's financial sector कि ठीक है यार, अब तो World Bank IMF ने बोल दिया this economy is doing well, let's go and invest in the same economy. Benchmark India's financial system against international standard, so it will check that whether India is fulfilling the Basel norms or IUSCO principles, or maybe insurance core principles, or maybe IAIS frameworks, which will show that yes, India is on line with the financial norms, which is obviously very beneficial for not only the investors to think twice before investing, but also for users like you and me, so that we can take a good decision, while even opening up a deposit account or maybe a insurance facility. Moving on to the next point. The next point talks about mandatory FSAP for systematically important jurisdictions. So FSAP is mandatory since September 2020. FSAP has become mandatory for countries with systematically important financial sectors, that is countries whose financial system have a significant impact on the global stability. तो कुछ ऐसी economies हैं जिनका impact global economy पे है, drastic impact है. So those nations, those financial sectors, they have been included under the mandatory list. We cannot ignore them because they are the systematically important financial sectors for the globe. So it currently applies to 32 jurisdictions, which include India, along with US, UK, China, Japan, and Euro area. It's quite obvious. India is one of the leading economies, or India is one of the fastest growing economy among the major economies. India is an economy which is providing, or which is utilizing highest digital transactions in the world, which is almost 50% of the world digital transactions are conducted alone in India. Then India has produced many fintech unicorns. So all these aspects, and India is a great market with ample of population utilizing these banking and financial services, which makes India an important jurisdiction, because of which it has been included under the mandatory list. So these countries, they undergo FSAP assessment every 5 years. For another 15 jurisdictions, the review take place every 10 years. Thus, India is one of the 32 systematically important jurisdictions. So it is mandatory to carry out the FSAP for India after 5 years. याद रहेगा ये? What is this mandatory FSAP? Systematically important jurisdiction. How many jurisdictions are included? 32. India is the part of it. Lastly, in case of these systematically important jurisdictions, FSAP is conducted on 5-year basis. But in case of another jurisdictions, it is conducted every 10 years. So India falls in a category of every 5 years review, which is need to be done. Is it clear till this point, guys? May I have a reply, please? I can't see you guys active today in the comment section. So may I have a reply? Am I clear till this point? Please reply in the comment section quickly. अभी तक तो मैंने सिर्फ और सिर्फ आपको हिस्ट्री ज्योग्राफी बताई है ऑफ एफएसएपी. नाउ आई विल बी डिगिंग डीप वेयर आई विल बी टॉकिंग अबाउट the key outputs of FSAP. Then we'll talk about its aspects with related to India, what all recommendations have been done, everything will be discussed one by one. Ready? चलो. अब इसमें ना दो चीजें हैं. ये जो FSAP है ना, it is full of two things. First one, it is full of analysis in the sense that how well Indian economy is doing or Indian financial sector is doing, what recommendations India should inculcate or India should implement to avoid any risk. Second is data, that is the result. What I believe is, as per the previous year trends, data with respect to FSAP is important, but analysis wala part is more important. So what I have done is, today I will be discussing with you the analysis part. The data part I will be covering with you in the next session in the form of MCQs. तो अगले सेशन में जो फर्स्ट 10 minutes होंगे या first 10 MCQs होंगे from the previous session, that is going to be purely data results or data based, where I will be giving you the important data which you need to remember. तो वो सिर्फ याद करने का काम है, वो आप कर लेना, लेकिन जो समझने का काम है, the understanding I will be providing you today in this particular session. Okay, so if I talk about the key outputs of FSAP, sir, FSAP culminates two separate but complementary reports. First one is Financial System Stability Assessment report, which is released by IMF, which focuses on macroeconomic and financial stability, systematic risk and crisis management, and stress testing. Second we have is Financial Sector Assessment report, which is released by World Bank, financial inclusion, access to finance, and developmental as well as structural aspects. So they are the two reports which are presented under FSAP, that is Financial Sector Assessment Program, one by IMF, other one by World Bank, and both the reports are important, and they are analyzing, they are estimating, they are understanding somehow interrelated but different segments of your financial sector. Today I have collective discussion of both of them, but I will not be discussing कि ये IMF ने बोला, ये World Bank ने. I'll give you the overall picture which you need to understand. Now, if I talk about the last FSAP for India, so it was done in 2017. The reports were published by both World Bank and IMF in 2017. So 2017 में last हुआ, report भी आई. Current FSAP 2024 was completed in 24. IMF ने ये report release की थी, that is FSSA report, on 28th of February 2025, and recently World Bank has released this report on 30th of October 2025, because of which this has been included in today's session. What are the key findings with respect to India alone? I am focusing. So World Bank's 2024 India's FSA report highlights that, first one, India's financial system has become more resilient, that means more self-capable, diversified and inclusive since 2017. We know that. Financial reforms undertaken by Indian authorities have helped the system to recover from past distress episodes such as IL&FS crisis, NBFC stress, and even the COVID-19 pandemic. However, achieving India's vision of becoming 30 trillion economy by 2047 will require continued financial sector reforms to mobilize private capital. तो उन्होंने क्या कहा कि सर अगर हम 2017 के कंपैरिजन में कंपेयर करें तो ओवरऑल देयर इज अ ग्रोथ. India has recovered pretty well from the past crisis, and if you want to reach to a term of developed economy, you want to achieve an economy size of $30 trillion, then this sector needs to grow along with the reforms on regular basis. Now we will be discussing about each and every sector one by one. So the first one is macroeconomic and financial overview. If I talk about macroeconomic and financial overview, so in case of macroeconomic and financial overview, India's economic context, it says that India's economy has become more resilient and diversified since 2017. Reforms after the banking crisis of late 2010 and COVID-19 pandemic has helped the economy to stabilize. Here comes the data which is important. The data says financial sector has reached 187% of India's GDP. If I talk about the financial sector asset value, so the financial sector asset value is 187% of GDP in 2024. Banks, they still dominate, but yes, NBFCs, they are also growing. Like NBFCs as well as the mutual funds, now they account for around 44% of the total financial assets. तो पहले ये asset थी 35%. Now this asset has increased to 44%. So this asset value has increased. If I talk about non-financial institutes, what is the role of the states? So India's financial system still has a strong public sector footprint. Why? Because India has strong 12 public sector banks which are operating. Then we have 28 RRBs which are operating in the country, one state and union territory, one RRB, public NBFCs, as well as we have public insurance firms, which gives a very strong hold of government in the financial sector of the economy. So government also directly directs lending through priority sector lending. So in case of priority sector lending, we need to understand one point कि अगर गवर्नमेंट आपको प्रायोरिटी सेक्टर लेंडिंग करने के लिए मजबूर कर रही है या कहीं ना कहीं आपके ऊपर ये बाउंडेशन है, so it will obviously lead to that banks, they are lending to agriculture sector, they are lending to MSME sectors, they are lending to housing sector, they are lending to weaker section, because of which it gives a factor of inclusiveness. It gives the factor of inclusiveness. So if I talk about the features, the feature include financial inclusion, finance, access to finance and developmental. So this financial inclusion or inclusiveness feature is there because of priority sector lending, which is not only applicable on public sector banks, it is applicable on all the banks which are operating in the country. अगर मैं public इनकी limits की बात करूं, public sector bank, private bank and foreign bank with branches more than 20, limit is 40%. In case of RRBs, limit is 75%. In case of small finance bank and urban cooperative banks, this limit is now 60%. It's 40% की बात करें तो 18% goes for agriculture sector, 12% goes for weaker section. Then we have 7.5% goes for MSME sector, and rest is distributed to the other sectors like housing loans, education loan. We have housing loan, we have education loan, we have renewable energy lending, we have social infrastructure lending. So they all are included under the priority sector lending format. For small finance bank, it is clearly mentioned that you have to achieve or you have to maintain the 40% in a similar manner. Rest 20% you can invest or you can provide loan in any of the subcategory where you feel that you will be earning better returns. It will be your choice. Moving on to the next. The next point is financial stability and oversight. So a systematic risk oversight. India has a framework for macro-prudential regulations, tools used by RBI and FSDC, that is Financial Stability and Development Council, to prevent system-wide risks. To provide what? So to prevent system-wide risk. However, data collection and sharing need improvement, such as what is the improvement? So they have given the point that India has a framework for macro-prudential regulations, tools used by RBI as well as Financial Stability and Development Council will prevent the system-wide risk. But data collection and sharing needs improvement, which shows Indian economy is prevailing to financial risk because of short-term cash flow pressures. Interconnectedness between banks, NBFCs and market is need to be improved. Climate-related financial risk, example floods, crop losses, is need to be included while assessing the risk for a financial institute, as well as household indebtedness. That means the loan which is increasing on the household sector, and some of them, they are not even in a position to pay back. That is need to be checked. Then we have macro prudential tools which are suggested. So first tool is suggested, that is debt service to income ratio limits, prevent over lending to the individual. So debt service to income ratio limit. So debt service to income ratio limit से क्या होगा कि सर अगर आप लोन ले रहे हैं उस केस में what is going to be your EMI with respect to your income, this ratio limits are talked about, जिससे क्या होगा कि सर जो households हैं they will not be able to borrow the loan because of their income or this ratio constraint scenarios. Next we have counter cyclical capital buffer. So extra capital banks they must hold during the booms to absorb shocks in the downturn. अगर आपको याद हो, for counter cyclical capital buffer, we have discussed this. In the counter cyclical capital buffer, the range is 0 to 2.5% of RWA. And in case of 0 to 2.5% of RWA, you need to understand one thing. It will remain 0% or even below 0% if credit to GDP, credit to GDP gap ratio, credit to GDP gap ratio is below 3%. If the gap ratio is 3 to 15%, then it will be increased from 0 to 2.5% accordingly. And the moment it is more than 15%, then this will be maintained at 2.5%. और इसी thought को दिमाग में रखते हुए RBI ने this year made it very clear that our GDP gap ratio is not high. It is below 3%, so there is no need to maintain counter cyclical capital buffer. But in this report, it has been recommended that today your banking sector is doing well. Your banking sector, if it is doing well, you should ask them to maintain counter cyclical buffer, which will decrease their excess lending capacity, which will help them to maintain reserves, which will counter the tough times in the near future. So in case of banking sector, RBI has made major improvements where RBI has brought cooperative banks under tighter regulations, which is very important and it was very much needed. Adopted scale-based regulations for NBFCs, which have been customized into 4 layers. We know that base layer, medium layer, top layer, upper layer. Then we have tightened prudential norms. So that means tightened prudential norms in terms of rules for capital, liquidity and exposure limits. Now, what are the recommendations? So in the recommendations wala part, the first recommendation is move towards IFRS 9. What is this? Sir, it is basically an accounting standard which will help you to calculate, the credit risk on expected format rather than inculcated format, or rather than you can say that calculative format. तो यहाँ पे बहुत बार इस पे हम बात कर चुके हैं कि now RBI or even the international financial institutes, they want that India should calculate its exposure on the expected format. So we call it as IFRS, where earlier we calculated the risk as per incurred loss, but now we are going towards expected credit loss model for recognizing the credit losses on the financial sector. So remember that shift from incurred loss to expected loss. I hope it is clear. It's a forward-looking approach. Impact on financial statement will be there and it will be applicable, or it will be very much, I would say, thoughtful, and it will be a good step for all the stakeholders which are involved in the same. ठीक है जी, clear हो गया point? If it is clear, give me yes sir. Moving on to the next, enforce Pillar 2 capital or add-ons. Pillar 2 capital add-on, that is extra buffer for specific risk. Extra buffer for specific risk. This particular statement is with respect to what? So this particular statement is basically with respect to Basel norms. So Pillar 2 capital add-ons, they have enforced by the national or regional supervisory authorities in the European Union or in the national regulations done in UK through the supervisory review and evaluation process. What it talks about, so supervisory authorities enforce Pillar 2 add-ons using the process such as bank's internal capital adequacy assessment process, supervisory review and evaluation process, risk identification, determining the add-ons. Add-on means you try to focus upon, or I would say the supervisors, they use their expert judgment and risk by risk approach to determine the appropriate amount of additional capital a bank need to hold for a specific risk. That means bank specific Pillar 2 requirements which are not yet implemented, they are recommended to be implemented in the near future. Next point is remove exemptions for state-owned NBFCs. That means there should be no exemption for the government-owned NBFC. They should be treated as equal to the private NBFCs which are operating in the country, and it apply liquidity coverage rules suited to each business model. You must apply the liquidity coverage rules suited to each business model so that the desired or required value of liquidities need to be maintained in order to avoid liquidity risk. Then we have insurance sector. Sir, IRDAI has a solid framework but lacks power to first supervise insurance groups. So when insurance companies, they come together and they form a group, or we call it as conglomerates. So supervision of conglomerates is not done very well as per this assessment report. So there is need to move towards risk-based solvency framework where valuing assets and liabilities of an economy rather than accounting basis. तो यहाँ पे ये कहा गया कि now you move on towards the risk-based solvency framework where the value of asset and liability should be utilized rather than the data which you have in your account books. That should not be given, that should not be taken. So it says that insurance sector has shown a progress, but it is slow. It is not as fast as the other financial sectors which have evolved over the period of time. Now, if I talk about the capital market, oversight by SEBI has been effective and reform oriented. Major initiatives include collateral management and business continuity reforms for safety of the investors, framework for suitable investment, that is ESG standards, we have talked about it, mutual funds liquidity norms in order to prevent redemption pressure. Then we have corporate debt market development fund to act as a backstop in times of market stress. The corporate debt market development fund, where the fund has been developed so that corporates, they can raise loan when there is market toughness and they are not able to liquidate their shareholdings to raise the funds. In case of capital market, there are certain improvements needed. Risk-based supervision should be done for mutual funds and market conduct. Greater coordination is required among self-regulatory organization and incorporate emerging risk like algo trading and cyber threats. Then we have financial crisis management. India lacks a modern financial resolution framework which is aligned with key attributors of effective resolution by फाइनेंशियल स्टेबिलिटी बोर्ड. ये बड़ा इंपॉर्टेंट पॉइंट है. फाइनेंशियल रिस्क मैनेजमेंट के केस में यहाँ पे क्या कहा गया कि सर जो इंडिया है, क्या कहा गया, द पॉइंट इज इंडिया इज लैकिंग बिहाइंड in terms of modern resolution framework which is aligned with global key attributes of effective resolution by Financial Stability Board. So the proposal have been given. Proposal क्या है? The Financial Sector Development and Regulation Bill should be introduced to establish an independent resolution authority. तो यहाँ पे एक independent resolution authority की requirement है. Give clear tools to handle failing banks and NBFCs so that if any bank or NBFC is not doing well, we should have clear-cut rules and regulations which we have to follow in order to fight against the failing banks and NBFCs, which will safeguard the investors' hard-earned money, which will undoubtedly safeguard the investors' hard-earned money. समझ आया यहाँ तक? So proposed FSDR bill should address India's lack of modern financial resolution framework by establishing an independent resolution authority which will provide it clear tools to handle failing banks as well as NBFC and align the global standards like the Financial Stability Board's key attributes. Got it? Is it clear, everyone? Shall I move ahead? Okay, moving on to the next point. The next point talks about DICGC. So DICGC recommendation is needs faster payout and backstop funding arrangement with the government. So you need to pay out, or you need to increase the payouts done by DICGC, and there should be backstop funding arrangement with the government for providing funds in case of the requirement. Liquidity management, sir, RBI may expand eligible collateral during crisis, example allowing corporate bonds with haircuts to support credit flow. ये बड़ा इंपॉर्टेंट है. ये क्या कह रहा है कि सर लिक्विडिटी मैनेजमेंट के लिए आरबीआई एक्सपैंड कर सकता है एलिजिबल कोलैटरल्स, और एलिजिबल कोलैटरल्स में आरबीआई कैन इवन अलाउ कॉर्पोरेट बॉन्ड्स कैन बी यूज्ड एज अ कोलैटरल टू बोरो द लोन, बट देयर विल बी अ हेयरकट. हेयरकट का मतलब अगर वैल्यू 10 है तो 10 नहीं, तो आपको उससे कम वैल्यू पे लोन मिलेगा. दैट वैल्यू इज रिड्यूस कीपिंग इन माइंड द मार्केट volatility. Then we have the next point, that is climate risk and sustainability. Key finding says localized climate shocks such as cyclones, droughts, they have witnessed regional, they have posed regional risk, but these risks were not systematic. Consecutive agriculture shocks could increase loan defaults, especially for RRBs. This is need to be remembered. Transitioning to net zero by 2070 may reduce GDP by 5 by approximately 5% by 2040 due to losses in. तो यहाँ पे क्या है सर, if we are going to net zero economy, obviously you have to close down some of the major pollution causing industries like mining, heavy industries or power generation, जिसकी वजह से your GDP may decrease by 5% by 2040. What are the policy suggestions? Collect data on climate exposures, use parametric insurance like payout based on trigger events like rainfalls to manage agriculture risk. So in case of agriculture insurance, if rainfall is witnessed above the required level and it's very clear that it is going to damage the crop, so rather than waiting फॉर दी हार्वेस्टिंग सीजन की कितना डैमेज हुआ कितना नहीं, उसके बेसिस पे क्लेम मिलेगा। नहीं, जैसी रेनफॉल हुई अगले ही दिन उस रेनफॉल के बेसिस पे कैलकुलेशन स्टार्ट होके सर्वे शुड बी डन एंड ऑन द बेसिस ऑफ दैट रेनफॉल वॉट एवर लॉस दैट शुड बी कॉम्पनसेटेड अंडर द इंश्योरेंस स्कीम। रिफॉर्म्स आर नीडेड इन केस ऑफ प्रधानमंत्री फसल बीमा योजना, दैट इज द गवर्नमेंट रन insurance scheme which will reduce financial burden and it will improve the risk sharing done by the government or by the government scheme. Now, if I talk about financial inclusion and digital finance, India's strength is digital public infrastructure. So India has Aadhaar-based payments, UPI-based payments, account aggregators, which has revolutionized how you identify the user, how you verify the user, how you enjoy the real-time payments as well as the real-time data sharing which is done. So progress is account ownership reached 89% in 2024. So account ownership has reached to 89% in 2024. However, usage is still low, especially among women. तो आपकी जो account ownership है वो तो 89% पे पहुंच गई है, लेकिन यूसेज आज भी कम है। तो आपने प्रधानमंत्री जनधन योजना के तहत सबको बोल के अकाउंट तो खुलवा दिया, लेकिन वो अकाउंट्स उतने अच्छे से यूटिलाइज नहीं हो रहे। Challenges: encourage digital payments through customer centric incentives, manage consumer risk। देखो ये तो गवर्नमेंट ऑलरेडी कर रही है, यूपीआई आपके लिए फ्री है, सो इट्स ऑल बिकॉज ऑफ गवर्नमेंट सब्सिडीज, तो दिस इज अ कस्टमर सेंट्रिक इंसेंटिव ओनली। मैनेज कंज्यूमर रिस्क लाइक फ्रॉड्स एंड मिस सेलिंग एंड स्ट्रेंथन द मार्केट कंडक्ट ओवरसाइट फॉर फिनटेक्स so that fintech should provide proper and appropriate services to the public. Then we have open finance reforms, expand account aggregator system to include MSME data as well as additional financial products, introduce direct payment initiation option as well as license payment initiation service provider with strict consent rules. जिसको नहीं पता मैं आपको बता दूं, what is this direct payment? What is this direct payment initiation option which is available in European Union? So if I talk about the same, what it basically means, so when we use this word direct payment initiation, how it works, sir, we need a consent and consent is the key behind it. So customer must explicitly consent to a regulated payment initiation service provider to access their bank account and initiate a payment on their behalf. Second is secure communication. That means bank account servicing payments service provider are mandated to provide secure communication channels, typically standardized application programming interfaces, that is API, should be used. Strong customer authentication is needed and direct transfer will be done, which means direct account to account transfer of funds from the customer's bank account to the merchant bank account will be done without holding those funds in the escrow accounts of the merchant banker. So that is something is known as direct payment initiation, कि आपके अकाउंट से डायरेक्टली आपके मर्चेंट के अकाउंट में फंड ट्रांसफर हो गया without holding those funds in the merchant's escrow account or merchant bank's escrow account. Now, role of state and state-owned financial institutions. Problem is state-owned financial institutions, they still dominate, but they are less efficient. Priority sector lending helps in inclusion, but it creates distortion and compliance burden. Recommendation is privatize selected public sector banks, strengthen governance of the state-owned financial institutions, that means independent directors, professional management, attractive private capital using credit enhancement mechanism, attract the private capital for the same sector and evaluate priority sector lending regularly and adjust the target, but this target has been adjusted recently in the month of April 2025 itself. Then we have MSME and credit infrastructure. Progress is strengthen the Insolvency and Bankruptcy Code and SARFAESI Act for MSMEs, plan for National Financial Information Registry to centralize credit data. But what are the gaps? So delay in court and inefficient recovery still hinder the credit growth for MSMEs. Credit bureaus, they should expand coverage and data scopes so that they can cover most of the MSMEs under their data packs. MSME access to finance is pretty concerning as always. Only 27% of MSMEs, they have access to credit. On the other side, we all know that MSMEs, they contribute around 30% to India's GDP, around 45% to India's exports, provide employment to around 11 crore individuals, second highest after agriculture sector, but still only 27% of MSMEs, they have easy access to credit, and there is a credit gap of around 25 to 30 lakh crore rupees for the MSME sector. So need to expand digital lending, factoring, that is TREDS, and credit guarantee scheme. I hope you remember TREDS, that is trade. When we talk about TREDS is basically a platform where rediscounting of bills is done. Rediscounting of bills is done by the MSME so that they can arrange the funds. We call it as trade receivable discounting system. Reform SIDBI to better fund NBFCs lending to MSME, as well as support women-led MSMEs through flexible collateral requirements. So these are the changes which are need to be done. Then we have capital market and infrastructure finance. Market capitalization has increased from 144 to 175% of GDP. Market capitalization of India. Still, corporate bond market remains shallow. Institutional investors are too risk averse and they are restricted to AA plus securities only. So institutional investors, they are very risk averse and they are investing only to the securities with rating AA plus. Then we have reforms, enable mini bonds, covered bonds and securitization, improve tax parity and provide credit enhancement, sustainable finance and climate action. So India needs a sustainable finance roadmap with climate finance taxonomy, de-risking instruments, incentivize or provide incentives for green bonds and climate linked loans, which will boost the Indian economy in this aspect. So conclusion is, Indian economy has become more stable, inclusive and diversified, but it is still dependent on the state, needs stronger risk management and regulatory clarity, as well as must mobilize private finance and climate finance so that you can achieve the target of $30 trillion economy by 2047. By 2047. तो ये है आपका पूरे का पूरा कहानी जो मैंने अभी आपको समझाई. If it is clear, give me yes sir. If you have any doubt, you may ask please. Guys, if it is clear, give me yes sir. If you have any doubt, you may ask please. So I will be sharing this PDF with you all in a while. Download the PDF and go through with this report at least twice so that you can remember all the agendas. This is the analysis which is very well important for your SEBI exam, for your RBI exam, and even you can expect a question directly or indirectly in NABARD related to agriculture sector or maybe MSME sector. And those questions, while writing the answers to those questions, you can utilize the areas or the understandings or the learnings which you have achieved from today's session. So thank you so much for joining, guys. In the next session, I will be coming up with 10 questions on the same report. 5 of them will be revision, 5 of them will be data oriented questions, so that I can give you the data also, which is very much important for you all related to the relevant report. Thank you so much for joining. Don't forget to join the Telegram channel in order to download the PDF, and I will be sharing the PDF in a while. Bye-bye. Take care. Good luck. God bless you all.